Okay, so let's talk about your income statement. The income statement is also known as a profit and loss statement because that is what it shows you, whether you have made a profit or a loss for the period that you're looking at. That is how simple it is. So an income statement has three sections. You have your income at the top, your costs directly related to your income, cost of sales, and then you have all your running expenses. So three sections: sales, cost of sales, expenses. And the net total at the bottom is either a profit or a loss. So every source of income that you have in your business, whether it is from a sale of a product or the sale of a service, or if it's from something like interest earned on the bank account or rental if you own a property, those will all go right at the top under the income section. You can ask your accountant to show them separately if you want, so that you can track different types of income according to what you sell. So you can actually have an income account per product or per service or per division or per project, whatever works for you. But your income goes at the top of your income statement. Directly below that is going to be your cost of sales. That is literally what it cost you to make that sale. So if you sell a product, then the cost of the product to you is a cost of sale. The cost of getting that product to your customer is a cost of sale. That sort of thing is something that is directly related to earning the income. And that will go in cost of sales. Normally, a service business does not have a very high cost of sales. If you do run an operation where you are charging on services, so you provide something like IT services and you pay an IT consultant X amount, you have a markup and you charge that on, then your IT consultant can be considered the cost of sale. But most service businesses do not have much by way of cost of sales. They are related mainly to product businesses. So if you run a service business, don't get a fright if there is no cost of sales on your income statement. It's not necessarily a mistake. The next section is expenses. And the expenses are your operational costs, what it costs you to run your business. So your administrative costs, your salaries and wages, your rent and utilities, your stationery, your computers, anything that it costs you to run that business will go under expenses. And the only other two numbers you need to worry about on an income statement is gross profit and net profit. So gross profit is the result of your sales less your cost of sales. So that is the gross income that you've brought into your business from selling something. So I sold this, it cost me this, the difference comes into my business, that is my gross profit. Your operational expenses come out of your gross profit. That's why they are shown afterwards. You'll see sales, cost of sales, gross profit, expenses, because your gross profit on your sale funds the running of your business. And the figure right down at the bottom is hopefully a profit, and if you had a bad year, a loss. And it'll be the difference between the gross profit and the expenses that you have incurred running your business. And that is your income statement. The income statement shows you how much money your business has made in a particular period. When you're looking at annual financial statements, it will be for your financial year. But you can run an income statement for any period that you want to check, for 1 week if you want to. And it's quite common for monthly management reports to have an income statement of the month before. So you can actually see how that month did, especially if you can run one which shows it in comparison to the months before. That shows you whether you are doing better or worse month to month in your business. So that is the income statement, short and sweet. And if you want to check that your accountant has done it properly, you should have a fairly good idea of what sales you have generated in a month, what costs are related to those sales, and your day-to-day operational expenses. So you can see if something looks wrong or enlarged or reduced, and you can query that with your accountant.